All right, so today we are going to be creating a cash flow projection using Google Sheets. So it's very important to do cash flow projections, especially when starting new businesses or doing new activities, and you want to make sure that you will have enough money in the bank to pay the bills. So in case you aren't familiar with Google Sheets, this should be what it looks like. It's basically a giant grid or table. It works very similarly to Microsoft Excel if you're familiar with that. And we're going to look at both the basic setup of a cash flow projection as well as your formatting and calculation options. So the very first thing you're going to do is create your titles. So the first one should be your business name, and underneath it is what document this is, which will be a cash flow projection. I would then suggest skipping a line, and we will then be able to go ahead and get started with our cash flow projection. So basically what we are going to have is we are going to have a column for each time period that we're going to consider. Generally, this is monthly, but depending what you're using your cash flow for, it could be weekly or even daily. So skipping the first column, we are going to put our titles in. Like I said, am going to do monthly starting in July. Okay, and then you can continue on from there. So you can use the tab key to go over July, August, September, and so on. You can also simply highlight the first one or two that you've done and then grab this little bottom corner and drag those across there. If you're using your cash flow projection to look at a new business, I would strongly suggest that you do a minimum of 6 months, if not the first year. You can go ahead and format these so that you know their titles. I would suggest centering them in their cells or columns, which is this alignment tab up here. Okay, you can also go ahead and bold them or change the font if you would like. Along the left-hand side will be the different areas that we're going to look at. So the first thing we're going to do is cash in. Okay, this is a title. Again, titles should be capitalized, and in this case, I'm also going to bold it. Okay, underneath it, I am going to list all of the ways that cash is going to come into my business. Remember, this is a cash flow projection, literally cash. How is money coming into your business? So hopefully there is going to be some sort of revenue or sales or whatever you're going to call that. You could have multiple lines from that if your business did multiple things. So for example, a hair salon would likely have, like their haircut sales or revenue, but they might also have like selling products. So you could have a few different areas there. If you're starting a business, there's likely going to be some sort of investment that is coming in either from yourself or from investors. There may also be a bank loan. There could be a mortgage. Under the investments, you could have a few of them. If you have partners or a few investors, and you would literally put, Mr. X investment, Mr. Y investment. And if you get along here and you need to re-add another line, you can always click here on the numbers, right click and hit insert one above. I could put that different if I have multiple investments. Okay, and but really, this is entirely formatted and specialized to whatever your business is looking at. Before we add the numbers, I'm going to go and just finish up this left-hand side. So I'm going to then make sure once I have my list done, I'm going to have my total cash in. Okay. For each of these ones, you're simply going to insert a number into the column based off of what it is. So if you know that in your first month of being open, you're each, putting $5,000 in, then you're simply going to put that there, put what your bank loan is and whenever it is. Okay, so, if we're not getting the bank loan till August, we're going to put it in there. Okay, but if we're getting the mortgage here, then I think you get the picture. You're putting them in where you're going to go. We're going to come back to sales and revenue in a moment and talk about how you're going to determine those numbers. But your total cash in, this is a total, and so I'm going to strongly suggest that you use Google Sheets powers to do these calculations for you, and you're going to see this being really useful later on because what you're going to be able to do is you're going to be able to manipulate this spreadsheet a little bit. and all the numbers will recalculate for you. So to do that, you're going to hit equals. Sum is the formula you're using. You're going to put an open bracket, and then you're going to select all of the cells, all of the boxes that you want it to add up for you, and then you're going to put your closed bracket and hit enter, and you're going to see that it's automatically filling that in. If I delete that mortgage amount, then that number is going to change. I want it to be the same formula all the way along. So once I've done it in the first one, I can simply grab this little box at the bottom and drag it all the way across, and it's going to do the same thing all the way across there. Before we continue on, I am going to format my numbers. It's not always necessary. Personally, I like the way that it looks. So I'm going to select all of the boxes, and I'm going to go down a fair ways that I think are going to have numbers in them. Okay, and then I'm going to go up to the top here. There's going to be a 1, 2, 3 that says more formats, and I can go in here and choose the format that I want. Okay, you can do an accounting format that has dollar signs. You can just do a regular format that at least has the comma and the dots, a financial format that puts things in brackets when they're negative. Whatever you're comfortable with. I'm going to just go with the number format for now, that has those commas and those 0 zeros. Okay. All right. So I'm going to leave. Here I'm going to put my next title. So we've looked at all the ways that cash is coming into our business. Our next title is going to be cash out. It's very simple. It's very straightforward. It's the way that money is going to leave your business. Okay, this is going to be very, very specific to whatever your business is. So as I said before, you're going to customize accordingly. Okay, some things that you're most likely going to have, wages if you have employees. You're going to have some hydro, which is heat or electricity, gas, and water. If you have a physical location, you might have advertising. You'll need to buy supplies for your business. You might need to buy inventory that you're going to sell, or the products that or how you're going to create it. You might have to pay rent if you didn't have a mortgage. You will likely have to be paying back. So your bank loan payments are going to be starting. You need to think of that. Okay, so really all of those different things. There should be a category in here for, permits or licenses. Some insurance. All businesses should have insurance, et cetera, et cetera. Okay, so you can really include all of those things there that are going to cost your business money. Okay, and again, you're going to simply add numbers where they are appropriate. Okay, if you're not going to have an employee until your 3rd month, then you're going to put that over here. Okay, and again, you can use Google Sheets to do these calculations for you. So for example, for wages, all you have to do is put an equal sign in first, and then it will calculate for you. So for my wages, if I know I'm going to pay $16 an hour and I'm going to have somebody work 10 hours a week, and for a month, that's roughly 4 weeks, then, my number is going to be roughly that for a month. Okay, so you can use it to help do some of those numbers. Once you have all of those items of things that you need to pay for, you're then going to do another total. This is going to be your total cash out. Okay, and we're going to use the same formula. So it's the equal sum. Sum is when you want to add things together, and you're going to select all of those items that you've listed for things that you're going to be paying for and hit equal. And then again, you're going to select that cell that has the formula in it, and grab this little square at the bottom, and you're going to drag that across. Okay, and that is going to be your total there. Okay, so going on from there to finish our formatting, and we'll come back and look at some of these numbers after. Our final section is what we call cash flow is the title for it. Okay, how is that cash flowing in and out of your business? The first line that we're going to look at is basically your total for the month. I call it monthly. Okay, and this is going to be for the month of July. What was that cash flow? So we're going to go equals. It's going to be our cash in minus our cash out. And it's really important to note when I was putting in the values in the cash out section, they are all positive, okay? All the numbers in these two sections should be positive. Yes, the money's going out of your business, but we are keeping those numbers positive because we're taking that into account down here when we subtract that total. Okay, so in this case, because I don't have any cash outs, we're saying that for the month of July, I have had an extra $10,000 come into my bank account. Be very careful with the language you're using here. This is not profit. This is not money that your business has made. Okay, this is cash. What is in that bank account? Okay, so again, I'm going to drag this across. You're going to see that in the month of October, where I had no money going in, but I had money going out, that this number is going to end up negative. And there might be cases where that happens for you. It is okay if this number is negative for now. The final line here that we're going to put in is called cumulative. Okay, and if you know the word cumulative, it's everything adding up over time. This is basically your bank balance. Okay, and so at the end of July, because July is our first month of operation, our cumulative, our bank balance is going to be exactly whatever the monthly was above it. So you can just put equals the one above it, and that's what you're going to have. However, in August, okay, yes, in August, we see that our monthly, we have an extra 5,000 from what we had in the month before. However, if we think of it as that bank balance, we already had 10,000 and now we have an extra 5,000. So your formula here, you're going to go equals, it's going to be your cumulative from the month before plus the monthly from the current month. Okay, and then this one we can go ahead and drag all the way across. Okay, so but before we look at anything in a little bit more detail, what I want to say here, while your monthly is okay to be negative, your cumulative line can never go into the negative, because what that is saying is that not only do you have $0 in the bank, but you have negative numbers in the bank. And if you know anything about a bank account, you cannot go into negatives. Okay, if the money's not there, the bills will not be paid. The whole point of creating this cash flow projection is to make sure that this cumulative line never goes into the negative. That's the point of this exercise. So I'm going to go ahead right now and really make this line obvious for myself. So if you go up here to the fill color, okay, I'm going to highlight this for myself. I'm also going to go ahead and put an underline underneath it. I'm actually going to go ahead and put a double underline underneath it. Those of you who have done accounting, you know that's kind of our way of saying, like, this is the most important one that you're going to see there. Okay, a few other formatting thing under the, above the total lines, we are going to put a single line. So if you highlight that whole total line, go back to this border area, I'm going to make sure it's a single, and I'm going to go ahead and put a line above it. And again, this one, I'm going to go ahead and put a line above it. Okay, as well as our monthly, we're going to go ahead and put a line above it, and I'm actually also going to put a line below it. Okay, so that should be kind of that formatting that you're looking at there. Okay, so if we just, again, for formatting, if we just go right back up to the top, this business name and cash flow, I do want them centered over the whole thing. So now that I know how wide it's going to be, I'm going to select the business name as well as all the cells all the way over. And if I go up here next to border, there's a button that says merge cells. Okay, and then over here with a line, I'm going to be able to center it. I'm personally going to bold it and make it a little bigger to make it stand out. And then again, I'm going to do the same thing here. So selecting all those cells, I'm going to merge them. I'm going to center them. I'm going to bold this, and I'm going to make it a little bit bigger so that it does stand out. The one thing I'm going to point out here, if you have a situation like me where these words go past the edge of this cell, all you're going to do is go up between the cells where it says A and B, that line. You're going to see that arrow change, and you're going to be able to move that over to make space for the rest of your numbers. So, as I mentioned, for revenues and sales, this can be one of the harder things to forecast or guess at what that is going to look like going forward. However, I'm going to suggest to you that you consider this in kind of the worst case scenario, or at least like a very moderate guess, okay? You are not going to be fully booked or, sell out in your first month. People just don't know you. So, you need to take that into consideration. If you're unsure how to go about calculating this, okay, generally on your cash flow projection, you're not going to start seeing revenues until the second month. Usually this first month is about, getting that investment, buying your equipment, getting set up, et cetera, et cetera. And then you're going to start seeing those revenue and sales in your second month. For some calculations, you can use that equal sign. You're basically going to take whatever your price is. Okay, if you're selling, I don't know, shoes, and you're charging $25 for a pair of shoes, that's a very cheap pair of shoes. Okay, and then you're going to estimate for that first month what that's going to look like. I think I'm going to sell 100 pairs of shoes. Okay, and then that's going to give you that number there. Okay, if you're doing a service where you are doing the service, so for example, if you were doing makeup, remember, think of what that 100% would look at. So you as a human can maybe only do 4 customers a day. That would be totally sold out for you. Okay, so you could take 4. Okay, yes, there's 30 to 31 days in a month, but are you working every month or every day of the month? Likely not. Okay, we're looking at maybe 20 days. So if you times that by 20, and then times that by whatever you're charging them, let's say you're charging them $100 for that service, okay, this is your maximum. This is the max that you're going to be able to make in a month. And so my suggestion would be for the first 2 months that you expect to be making roughly 30 to 40% of whatever your maximum is, and then it can go up from there. It very much depends on your industry, but those are some rough estimations for you there. Okay, so even here, I don't even have to change this. I could just then do another times is a star symbol, and go 0.4 for 40%. And that's going to kind of give me that next number there. All right, so for this example, I have gone ahead and filled in some numbers as I want to point a few things out to you. So you will notice in this example, I have added my revenue and my sales of what I expect them to be, and I have left it at that for now. Okay, I've then gone in and added the things that I think I'm going to be paying for and what that's going to look like. Okay, one of the things I want to point out, likely your advertising spending is going to be much more right near the beginning. Even if we're not opening till August, we may start advertising in July. Okay, and those numbers will come from the research and the types of items that you want to be doing for advertising. Okay, you'll notice that I don't have any bank loan payments in here because I haven't determined the amount for my bank loan. So your cash flow projection can do some really great things for you. It can help make sure that you're going to be able to have the money that you need to run your business for at least the length of the cash flow projection, which is the first 6 months. One of the main reasons that businesses fail is, entrepreneurs predict that they'll be able to start making a profit maybe after the first 6 months. They don't think about being able to pay the bills for the first 6 months. And a lot of times they make their business plan and they go to investors and they say, I need this much money, but where did they get that number from? And your cash flow can be the thing that helps you determine how much money you're going to need. Okay, so let's say, for example, this is a small business that I want to start, and I know that I have, $4,000 that I'm going to put into this business. I can go ahead right now and put that in as my personal investment. Okay, that's great. I know that that's going to be there. Okay, I have all the rest of this information now, and because I use those automatically calculating formulas, I'm going to have lots of rich data for myself down here. You will notice that based off of what I plan to do, I have in the first month, I am short $6,800 to be able to pay my bills. Now, I told you this cumulative can never be negative, okay? And so that's what we need to fix. However, simply saying I'm going to get a bank loan for that amount of money, okay, while that fixes the first month, let's take a peek. We are still negative going forward. Okay, likely the revenues coming in for the first 6 months to a year are not going to cover all of the money that is going out. Okay, often we have to pay for things ahead of time before we need them, and so it takes us some time to fill that, to catch that up. So I'm going to undo this, and what you're going to do, you want to be looking at your cumulative, and you want to find the largest negative number. Okay, generally I used to say it was always at the end, but in some cases, you know what, you may be starting to make some money here so that the biggest one is further up. So whatever your largest negative number is. Mine is almost $26,000. So what this cash flow is telling me is that on top of my $4,000 investment, I am going to need another $26,000 in order to start this business. Okay, so let's break that down. Yes, right away I could just go, oh, I'm going to get a $26,000 loan. Okay, yes, that, that takes care of my spreadsheet. It's not negative anymore, but you do need to think if that is realistic. Is the bank honestly going to give you a $26,000 loan? Okay, in another case, you may say, oh, I'm going to go out and get an investor. You need to remember that investors are asking for ownership of your business. If you are only putting in $4,000 into the business, then you can only ask investors to up to $4,000 if you want to keep half ownership of your business. Okay, you can't say, I want $26,000 and you can have half ownership. Who's going to take that deal? They're putting in more than you. They're going to want more than you. Okay, so yes, I could say I'm going to go and get an investor for $3,500. I want more than half of my business so I can make the decisions. And then that would reduce my bank loan a little bit. So maybe that is something that I'm a little bit more comfortable with. Okay, or maybe this is the opportunity where I need to look at some of these expenses. Okay, maybe the location that I've chosen to rent isn't realistic for something I can afford off the bat. Maybe I need to choose a different location that has a lower rent. And if I put that through, okay, maybe we're going to see that I don't quite need as much money. Okay, or, maybe all of those perfect ideal advertising ideas that I came up with when I was planning are not quite feasible. So maybe, yes, I want to have lots of advertising at the beginning, but maybe after that, all of it needs to just be reduced a little bit. Considering the things that I put out. Right away, just doing those two things, I'm seeing, now it's an 11,000 deficit that I have. So you can really go through and make some considerations. The one thing I do want to note, if you are planning for a loan, so if I'm saying I'm going to go to the bank and get $12,000, you do need to add these bank loan payments. So there is a formula built into Google Sheets that you can use and have it automatically calculate your bank loan payments so that as you fiddle with your bank loan, you're going to be able to see what happens. So you're going to go to the month after you take out the loan because that's when you'd have to start making payments. You're going to start with the equal sign and you're going to put in the formula PMT. You're going to see this as a payment formula and you're going to put an open bracket. Okay, the first thing that you're going to type in here is the interest rate. So generally when you go to a bank, they're going to tell you how much interest you need to pay on a loan. Depending how the economy is doing, that is going to be different. Right now, with the economic downturn, you can likely get a loan with an interest rate of, 2.5% to 3%. However, a few years ago, it was as much as 5%. So for the sake of this one, we're going to go with an even 4%. Okay, and again, a percent, we have to change it to a decimal, so it's going to be 0.04. Okay, and because we're paying monthly, we're going to divide that, which is a slash button here, as you can see, by 12. Okay. You're then going to put a comma because there's more information that they need. The next thing that the formula needs to know is how long you're planning to take to pay this off. Okay, so we're going to start by putting the number of years. Okay, generally bank loans are, somewhere from 3 to 10 years. If you're lucky, I'm going to go with 5. Okay, but again, we're paying it monthly, so we need to times that by 12, and times is the star. Not done yet. I'm going to put a comma because I've yet to tell them the amount of my bank loan. Now, before we do that, we need to make it negative, okay, for the formula to work. So we're going to put a minus sign in, and then we can actually just go ahead and select the cell, the box, where the amount of the bank loan is, and then it'll do it for us. We need our end close bracket, and we can go ahead and hit enter. So for a loan that is $12,000 that I'm going to pay back over 5 years, I need to make monthly payments of $221. Okay, and what I'm going to do to keep things simple, we're not going to drag this one across. It'll get messed up. I'm actually just going to go equals and select the cell next to me, and then I can drag that one over. Okay, so it's the same each time. You'll notice, well, before I determined this number was enough to cover, my cumulative does now go minus because I'm seeing these bank loans payments go out. So I might need to make this bank loan for a little bit more, knowing that I'm going to have to make those payments to make sure that I'm going to be able to cover those all the way along. All right, so this is your basic setup for a cash flow projection and how you're going to go about using it to make sure not only that this is a viable business that you're going to be able to keep afloat for the first 6 months, but knowing exactly kind of what you're looking at from a financial point of needing either a bank loan or an investor to get you off your feet.
Thank you so much for watching today's lesson, brought to you by Plugin to Learning. All the resources used in this video are linked in the description below. If you have any questions, feel free to comment. And to continue learning with us,